If you think that you have to have 20% down in order to avoid the expense of private mortgage insurance or PMI, that is false. There are so many different ways that you can actually skirt that PMI. There are offerings and there are banks and there are all sorts of different programs out there. Unfortunately, the banks, or I should say, the mortgage institutions that are out there advertising the most are not the people that offer these types of programs. Not saying that these are bad companies, but there are so many different product offerings that offer conventional financing. And actually, it's almost hilarious because conventional financing is anything but conventional. So let's explore a little bit of unconventional financing, shall we? Now, I don't want to get into all the weeds on why banks actually give all sorts of different types of lending out there, but I do want to say it's very simple because of this. Banks have to actually have a diverse portfolio, which I think is a very good thing, a diverse portfolio of lending to all different census tract areas. If they are only specializing in one, actually, the federal government actually will fine these banks a pretty large sum of money. So, because of that, in order to actually appeal to the banks and having a diverse portfolio, again, which I think is a good thing, they will actually have multiple different programs that actually appeal to all different categories of wealth or census tract areas, to actually base on how much. What's the average income in certain areas? So, all that to say is on this first one, they will actually incentivize the actually having a physician's or executive type loans. So if you are trying to actually have a more affordable approach to purchasing a home and not necessarily having to do a big type of what they call jumbo loans and things like that. There's actually specialty financing for people that banks kind of know that they'll make a big amount of money in their career because they are a physician, they are a CFO, CEO, something like that. They actually have several different banks actually have these types of programs that are out there. And so the biggest reason for that is because, you know, general, if you're an executive, you want to have an executive level home. Hey, nothing wrong with that. But sometimes these types of people also have massive debts from schooling that they have yet to pay off. So some of these banks may not even count some of those student loan debts so that they can actually finance what they have now. Because again, the risk is generally, again, they're making some assumptions here, generally lower in these types of programs. So, just because you have this massive amount of debt on one side, if you are a physician or if you are an executive, there are different types of financing that's out there. One of my favorite things that I have done is been able to actually help people that didn't really have that much money for down payment actually get them into a program where they actually brought just $500 to closing. That was it. $500 to closing and they bought a home. And they, some of them still own it. Some of them have actually sold their homes and upgraded already and used that equity that they actually were able to get it. But there's so many people that just think that you have to have a certain number of down payment or else I can't buy. And that is not the case. Now, there are plenty of restrictions, and I really can't get into the weeds on this video because it would take way too long. But there are ways that you can actually have no PMI and have a zero down payment, maybe just pay closing costs, something like that, and actually be able to buy a home. And this is such a game changer for so many people because there's a lie out there, and you know what? It's not necessarily a lie. There's probably people that have given this advice for great intentions, but there's so many people that think you have to have that 20%. You have to have 5%. You have to have 3%. And that's not necessarily the case. So, if you want to explore some options, definitely we can talk. But that's there are so many different ways out there, and it's because of the fact that of what I talked about just a second ago. banks have to have a diversified portfolio or else they get fined massively by the federal government. They can't just lend to rich people. They can't just lend to, middle of the ground people, whatever you want to call them, middle class. They can't just, lend to low income. There has to be a diverse, because there has to be a certain percentage on their books. So there's different programs out there that banks usually have, that actually are big proponents, and they have these programs that would greatly benefit you. Now, if you've already talked with a lender in the past and you say, TJ, they don't really have these types of options out there. Well, probably because there's a vast majority of people that are in the lending business that are just lenders from the standpoint that they're a part of a mortgage company. They aren't actually a part of a small regional bank. So again, very briefly, the difference between banks and mortgage companies, or mortgage brokers, is that the mortgage broker, and there's absolutely nothing wrong with this, they're kind of the retail. So they put you into a box, a category, whether that's conventional, FHA, VA, USDA, something like that, putting you into a different box, and then they actually sell the loan off to the secondary market. That's where you hear about these Fannie and Freddie and the different institutions like that. There's nothing wrong with that. There's nothing unethical about that. And in sometimes that can actually be a better scenario for you than even going with some of these smaller banks. But if you're a person that doesn't quite fit the mold, maybe you're self-employed like myself. Uh, maybe you just don't have that much down payment. Maybe you have a great job, but anyways, there's all sorts of different things. You don't fit the mold. There are these different programs that these small regional banks, they are the ones that offer this very competitive pricing. And again, I've had mortgage broker friends of mine that are great friends, excellent at what they do. And then I've compared and said, hey, I've got somebody in this program over here. And they said, I have no idea how they're even able to do that. That's impossible. I say, nope. It's not impossible. And I closed, I think, 8, 10 of them that year, of people that just, they only brought roughly $500 to closing. Um, so that's not going to be the case for everybody, and you do have to fit into that little bit of a mold too, in order to be able to make those types of programs work. But if you can, take a benefit of it, because it's going to save you thousands of dollars a year, and it's something that you can set you up for mortgage success and homeownership success here into the future. Buying a home is honestly one of the best investments and largest investments that people make in their entire lives. So, knowing what you're going to be getting into a little bit ahead of time and kind of making a plan is probably something that, well, I would say that you should do that. So, one of the biggest things and the best things that I've actually done for my clients is I actually have a planning guide. Oops, actually, I've got one right here. I've got a planning guide that actually our brokerage has actually put together, and it's almost like couples therapy for real estate. And it's something that I can actually send you. I can send you an electronic version of that, and that's something to be able to make a plan. And it's goes so much far beyond of how many bedrooms and bathrooms that you want, or what the design or the look. It's about taking a step back and actually saying, let's put together a mortgage strategy so that you're not over leveraged. You're not banking on that promotion. You're not banking on that. Let's take the numbers and make sure that they actually work for you versus the other way around, which unfortunately is the approach of many, many people. Let's make sure those numbers actually work for you. And that way, you're setting yourself up for success going into the future and being able to actually put a plan together. So, with that, if you want to reach out to me, my information is actually in the description of this video. Feel free to reach out to me anytime. And thank you so much for watching.